Markets around the world are flash crashing, and it has all of us as investors and traders asking the same question. Is there a recession coming? What's going on in the world of the geopolitical stage? And of course, should we be paying attention to this as a buy the dip opportunity or something more sinister? In today's video, we talk about what Tom Lee from Fundstrat believes, what the data is suggesting, and of course the unwind in the Japanese market that has entered into now a technical bear zone. With volatility on the rise, the S&P 500 entering into correction phase, and crypto crashing to levels that we've had on the charts for quite some time, there's a lot to talk about. Let's go through stocks, commodities, and cryptos, guys. It's going to be a good one. Let's get into it. Well, welcome back everyone to the special edition of The Daily Show. Today we're talking about everything from the data to the macro that we need to be watching. But did you know this is now the third worst August start that we've ever seen for markets, only being eclipsed by 1998 and 2002. Now, I want all of us to remember 1998. It comes up a few times in the data that we're going to be talking about together. But we've also entered into flash crash events. Basically, the Nikkei 225 that everyone's talking about, the Japanese market, has fallen for so many days straight with back-to-back negative 5% sessions, a huge unwind going over there. And again, only 3 times has this ever happened. Notably though, it tends to be around the capitulation lows for markets. So this is very interesting when we look at the structure of the Nikkei a little bit later on, and we talk about whether this is actually the risk-off event that everyone was looking for the potential buy the dip zone. Now, a couple of little updates. Over on X, we're sharing quite a lot of charts, links in the description and the pinned comment. And also, if you're interested, we're putting out a special overall newsletter tomorrow and the next day and the next day this week if we do end up seeing turn events in the structure. So make sure to sign up, free to do so, links in the description, join over 20,000 other people that are interested in these types of things. So let's check out what is happening, completely free by the way. Let's check out what Tom Lee believes is happening to the market. And he's using a pretty good indicator here, the ROC, rate of change. We've talked about that a few times on the channel to, kind of figure out some edge in the past. And this is the VIX 3-day ROC, which has gone over 65%. And that usually links to potential risk-off events and the end of those. Now, here are the data stats. Of course, we go to a few different points, flash crashes of 2010, 1990, and in some cases it goes a lot lower, and there's actually quite a lot of time between the lows from this point, and in some cases it's only a few days. Now, in previous ones, it's either been the low event when we saw this signal, but it also has been within the first 4 days. And I think this is why it's so important to be checking the market this week. 88% of the time over the next 6 months, it's bullish, and 8% median return. So not a bad return when you consider back to the highs basically is what that's predicting. And it could happen very, very quickly. So Tom Lee coming out with some interesting data here. Of course, ever the optimist. But let's bring in one of the 3 things that everyone's discussing right now. Of course, the W word, the recession word, and of course the unwind or margin word. Now, the federal funds rate is where everyone's going to for the recession word. Now, if you watched our previous video on the weekend about the SARM rule, we had like literally a 30-minute plus video going through and debunking that a little bit. Also talking about whether we are heading into a recession now or maybe later. But this is the question that everyone's got. How many rate cuts are we going to get? JP Morgan have come out and said they expect 2 times 50 basis point rate cuts. Now, if you know anything about rate cuts, you would know the speed at which these rate cuts are done and also the timing that it's done and the data around it is very, very important. So this is showing us here the returns over the next 3 and 6 months following the first rate cuts. Now, in recessionary periods, we obviously saw very bad returns across the board most of the time. This is a recessionary period. Now, in non-recessionary periods, in soft landing periods, we saw a pretty good return, in fact, an exceptional return over the next 6 months. And then in a credit crash event, we saw exceptional returns. And this is, of course, if something really bad is going on. Now, 1998 comes up here, also another concentrated market where we had a LTCM collapse. And of course, we ended up getting support there in the markets, and the markets went ballistic on this event. In fact, very, very good gains. Now, a lot of people are saying, are we in the soft landing or hard landing category? Now, there is a delineation here. Do we see a crash over the next 12 months? That is, we enter into a recession. Remember, technical or recession is usually by GDP. And at the moment, the 2.8% GDP, even though it's been revised down, I believe, by the Atlanta Fed, is still running at a positive. Remember, it technically takes a little bit more to dump these particular events. So let's have a look at how the markets will react before a rate cut and after a rate cut. And this is usually what happens. We tend to see a bit of a collapse about 1.5 months out. Now, remember, when do we expect the rate cut? September. So this is actually in line, both for one that doesn't end up crashing and it ends up going on to a nice move, and for one that ends up in a recession over the next 12 months. And again, within the 12 months is the key factor here. I still believe, and I know a lot of you out there do believe, that we are going to enter into an epic recession driven by debt problems around the world, and that is more than likely still a little while away. I would say 12 months plus, and therefore there could be some interesting stats here. But way market trades will be important. We tend to see a bottoming event here, followed by quite a large bull event. Now that would point to August actually ending positive in this case, followed by sells straight after the rate cut. Now, this is important because, of course, after the rate cut seems to be quite consistent. Sorry about the blurriness of that chart, but it was just the one I could find there. This is where it gets really interesting. Take a snapshot of this one. I would encourage you and have a look. This is a Bank of America report from Mike Siccardi over on X. And basically, it shows you what tends to happen 3 months, 2 months, 1 month, and then 1 month, etc. after. And there are actually quite a lot of good cases here. Again, when there is no recession within a year of the first rate cut. Now, the Fed is coming off a pretty high bracket, 5.5%. In some ways, this is a recession caused by central banks around the world due to trying to fight inflation. So remember, we've had these types of times before where we started to see cuts, the market started to weaken, then inflation came back, then they had to raise rates again, back in the 70s this was, and then of course they ended up causing a monster recession. So what ends up happening here is that this is the type of thing that we need to be paying attention to. What happens months before into months after? So notice the averages here. Again, 1998 comes up a few times as we go through the data, as does the 60s, which is an interesting period. We tend to see sell-offs 2 months before in the vicinity of potentially 8 to 7%. So right where we are at the time of this recording is around that 7-8%. 5,200 actually would pretty much give us that. We also know that when the first rate cut comes in, as long as this isn't shared too much out there, we do tend to see 1 month after the first rate cut a negative period, which actually lines up with a lot of the data we've been talking about. Sell off back end of July, pick up somewhere in August, sell off back in October or September late, and then pick up into the election. Now, this is a very interesting factor because, of course, we've discussed it. Now, this is another chart you will have seen, bar chart sharing this one, many other people sharing this chart. We've got it over on our X somewhere as well. And it shows you that it's very scary. A rate cut usually causes a horrible recession and everything's terrible. Well, this is a bit cherry picked. This is when we've had recessions, I think, most of this data. And you'll notice that these are the bad scenarios, of course, the negative 50%. Now, it's possible we're leading into those in the future. I don't think it's right now, but of course it could be. 2001-2, 2007 and 09. And usually at these periods, we see a lot more weakness in certain sectors as well. Usually there's some outlier sector that's doing really poorly. So why is this so different? Well, we're not considering all rate cuts here. We're considering recessionary rate cuts. Let's move over to whether the sentiment can change. Well, basically we know that this chart is going to get wildly different. I would love to see your comments down below. What's the guess for this week? Remember, these survey reports are done on Tuesday. I'm going to guess 38% plus bears. So maximum fear starting to come straight into this market. Neutrality will go up, of course. And the bulls, I would think, will be going down to 32%. Now, that's a pretty big call. We'll see whether that happens. But there's a guess there. And I'd love to see your comments down below. We know that, of course, also maximum leverage has been or maximum fear has been hit on the Goldman Sachs indicators, which are in our weekend video. Check it out. I'll pin it at the back of this video so you can check it out. Fed funds futures, we know everyone's now pricing in pretty high chances of rate cuts, 73% chance of a 50 basis point cut in September. So remember September, remember basis points, remember what the data and the stats say around that. And what that's leading into is, of course, the VIX really living into its path. Huge volatility, increased volatility all the way up into the November elections due to recession fears, due to W fears, due to all of these types of things. And this could mean that we either bottom, or in this case, top in the VIX either in August, which is now above 20. So of course we hit a 29 on the VIX, and October could be a high. It's unlikely September gives us the high of the VIX. It's usually August or October. So again, interesting stats there to be shared. Now I posted this over on X because crypto flash crashed over the weekend, probably due to illiquidity, and it crashed into zones that we have left on the charts for ages. 51 kind of 51, 52 level got reached on Bitcoin. What an amazing level for it to hit. Now I didn't expect it to get down here. I thought it might find some further bullishness, but this absolutely got clapped. We'll talk about that later on. And Ethereum, wow, massive level at 2230. That is a zone that I seriously like on the charts. And actually, if we just go back here, have a look at this red side. Everything's red. It's all red across the board, and of course looks bad. Now, in years where the incumbent decides not to run, this is the data stat that we tend to see with the markets. In general, you would have to say the markets overall are usually bullish in this period of year, and we've kind of tracked it fairly well. Of course, August can mark a little bit of problems here in a few of these, followed by strength. I would take that with a slight grain of salt. For earnings season, it's mostly over already. Of course, NVDA will be the big one everyone discusses in a few weeks' time, but you'll notice here, and there are some interesting stats as well. Stay tuned for that. NVIDIA, the stats are wild around the earnings, and I'll bring that out very, very soon in one of the videos. But we're over the hump now. We're through the biggest amount of earnings. In general, it was pretty good. It wasn't exactly negative. And of course, if you like to live dangerously this week, Reddit is your choice. I mean, the options market is expecting a plus minus 20% from Reddit. That is absolutely wild. DDOG, TTD, lots of these hyper growth style stocks, super micro as well, plus minus 15. I mean, it's going to be wild. Earnings season's still here for sure. Now, we don't want to lose sight of the 70 thrust or the Whaley Brett thrust. Why? Because it kind of makes sense. Remember, there have been previous occurrences where the markets have got tanked after seeing these thrust events, especially this 2009 event and even one in 2020 as well, where basically we've got a 100% track record with quite a lot of data, and it's returned incredible returns over the next 12 months. So if we do start to see bullish pickup, it could be real even if you don't believe it, because markets may be supported. The Federal Reserve can move from 5.5 down pretty quickly. They've got a lot of room here on what they can do. Is it going to end up badly? I'm sure it will, but these particular thrusts are still there and we need to pay attention to it. As is secular bull market runs, you'll notice actually in this one here, which again is the 1982-2000 run. So what is that? That's 1998 effectively. We see this flash crashing event, and that's kind of what we're looking at right now. To me, it seems like a shakeout. I think we're going to actually run to a new high. And if that does occur, ooh, it's scary. We are in the late cycle. If we get a new high off this, it's actually more terrifying than you think, because what that's showing is that we really are late cycle, and you'll need to think about that. Again, what are some of the best late cycle things? Utilities, gold. We've discussed it a few times. We just talked about in our Monday macro as well, which we do every week for our private community. Links in the description for the Market Masters Club if you're interested in that. But let's go over to the SPX. We know we hit the weekly 20 moving average. We know that we're now underneath that, and that opens up quite a few levels that we could discuss. 5200 is kind of like the secret level. 5210, 61.8 fib of the whole move. And do remember, put it in perspective. Are we still in an overall higher high and higher low market? Yes, on the higher timeframes, we certainly are. So it's important to put things in perspective. What have we actually seen come off this market so far? It seems terrifying, but in reality, it is 7.59%. Well within the brackets of every single other major rate cut kind of time. We've seen those 7s and 8s before, and we're coming down to those levels. Now, because we've fallen so far underneath 5,300, which we kind of suspected this was a possibility, that opens up quite a lot of different opportunities. First up, 5350 becomes a very important point for bulls this week, and 5200 becomes the next negative gamma zone. Now, let's talk about the negative gamma because it's pretty wild. Take a look at this. This is the Monday. Wow, there's so much offside hedging that needs to be done. This could create waterfalls into 5200. There's going to be a lot of volatility. This is huge amounts of negative gamma. We know that they're mostly offside, you would have to suspect. So this means that hedge funds must hedge some of these positions, and that can easily create a fall off to that 5200 zone, which basically is the end of the puts. So you can see why it could get there. Then after that, well, it changes a little bit. So this is still negative gamma. If you want to be more safe, then you should buy the V, not the dip. We've mentioned this several times. Buying the dip is dangerous as a trader. As an investor, sure, you might hold it, but buying the dip is definitely dangerous as a trader. Buying the V gives you more stop loss levels, more momentum, more of those things. So remember, generally buy the V, don't buy the dip, if you can help it when you're trading versus investing or positioning. S&P versus CTAs, they dumped hard. I would expect that to be even more dumping today. Potential capitulation and zeroing events here for the CTAs going neutral. That could be a good sign actually for people that are trying to find that dip in the markets. Copper finding some support. We'll talk about that soon. Gold finding some massive support again. We like gold. Gold is good. And we move over to Brent here, which fell again, but I think it's at a support level, which you can see here on the charts, and we'll look at that soon. Let's move over to NVIDIA. So a lot of people specking that this could go to 95. 95 is a huge gap fill zone. We've seen huge dark pool trading. Now, remember our previous video, again, links in the description at the end if it's your first time here. We talked about these dark pools. They're everywhere. It shows us that there's probably someone accumulating a position. We do want to see them continuing to bid this. Still negative gamma, still offside before 113 on the markets. You can see for this week expiration, and 100 being the put level of choice. So that's, of course, where all the puts are. And you'll notice the next weeks they go into 105. So some big trading decisions to be made and investment decisions to be made on semiconductors soon, which we'll look at. What about Tesla? Tesla fell. It's probably going to fall further. I'm thinking it's actually 188 kind of zone now that we could get to on Tesla. 200 unlikely to hold unless we see a bid across the market. But let's go into the charts here. First up, we covered these in the previous video. So of course, S&P 500 versus central banks. Well, central banks are still fairly accommodative in the markets at this stage. Let's move over to the VIX. Of course, a few of you mentioning, but Tom, even if the VIX wicks down, while that might be the high for the VIX, it's not necessarily the low for the markets. You are correct. Sometimes it is, sometimes it isn't. Over here, you can see a big wick rejection and a big wick rejection and big wick rejection. In this case, it was the end of the market drop. In this case, it was the end of the market drop. Over here, we actually dropped a little bit further, but we did get a chance to get out of that if you wanted to. So what this often does is it happens around key zones, and that key zone was 5,300. It was really probably our case scenario here. But of course, as capitulation likes to do, it's dropping underneath. Some other interesting things. Could we uninvert the yield today? 1.011. Now, this is a fairly good recessionary indicator compared to the SARM rule, and it is damn close. Now, I still don't think it's going to uninvert and everything's going to crash straight away. But yeah, this is certainly late cycle. You'll start worrying at those points. Let's have a look at the 10-year yield. 10-year yield, 2-year yield, all at drops that are kind of supportive of maybe seeing a little bit of upward tick pressure. Treasuries, of course, seeing some dark pool trades, some big trades coming into it. Again, if you hold it for a long time rather than a trade, there's a good chance it'll go to 110. But at the same time, it's not usually a great trade. What about the weakness in the market? XHB falling off. It'll fall more today, but still quite strong. XLF, still quite strong. Again, this is a debt market. You know, debt markets should be getting thrashed if the bonds and the market was really terrified. 1.13 here on the ratio of bonds versus yields across the board. And you'll notice here that that is not a good sign. The last time we saw that was actually before the pretty big fall in 21. So we'll be watching this one very closely to see whether we've got an event. Let's move over to better cases. Copper. Looks like metals market may have bottomed, guys. Certainly a replicable trade here, something that we have on our day trading masterclass, a replicable trade through this point. A couple of good trades last week. Gold was good. One bad NASDAQ. One particularly decent Friday close trade for S&P, and quite a few different currency trades as well. But yeah, it just shows you there's different stuff going on. I think copper's oversold at this point, could be basing, which is a very interesting point there. What about the unwind? Well, let's have a look at the US dollar yen. A lot of people are going on about this and saying this is the end and this is so bad. It's certainly not good, but yen has been known to do this a few times. So you've got to put in perspective there on what the yen tends to do. And we also need to know that 140 is a key point. So it's moving into that point. Now, why that's important, I believe, is because if we look at the Japanese yen and the Japanese Nikkei in this case, they're actually hitting into key zones. Now, this is exactly where you would expect the Japanese Nikkei to get to. If we have a look here at a fixed range volume profile over the range, you'll notice that is a heavily traded zone of the way up. So around here is where you're wanting to look a bid. And this is certainly capitulation. So somewhere in here, this next kind of little point, capitulation's probably being reached. But as you can see, it's a bloodbath across the board. the markets have not found any bids. There was a small bid that started on Friday for the markets, semiconductors in particular, but now there is no bid in any of these markets except for the usual suspects that we would expect. Now, what are those usual suspects? Of course, gold. We still maintain, we think gold is a great multi kind of faceted approach market here. And it's holding up strong. I mean, I obviously think this thing is going to go to $3,000 an ounce. I don't really think there's much changing there. And in general, nice little trend line. A little bit of weakness here. I could see why someone would maybe try to shorten here if there's day trading. But if we get above 2480, this market probably going to move towards 2600. So gold looking good. Gold stocks looking okay. Silver, not anywhere near gold. So ratio-wise, silver super behind. Look for a 29.45 this week. If that happens, could be really good buying for silver. We'll keep following that. What about oil? Well, oil needs to close above 74.45. It's into the zone of interest. We obviously looked at it here. We looked for a 79. Swing traders will be at 79 plus. Oil is still in the collapse zone. So still the bears in control around that key level though. And let's have a move over to some of the other indicators. So one of them, I had Amazon up there because it needs to hold that level. But XLY, XLP, this is consumer discretionary versus staples. A lot of people have asked the question, are we seeing a huge move to defensives, are markets crashing and everything's going bad there? Well, we're actually at important points. 2.20 is important for consumer discretionary versus staples. If this gives up, it shows us we could be in superior late cycle investing. And during those times, you usually expect things like staples to potentially do a little bit better, utilities to do better. In particular, have a look at this, have a look at utilities, have a look at healthcare. All of those are actually buying up. One of the things we've seen recently when we've been looking at this in our Market Masters Club basically has been XLV versus SPY. You can see here, healthcare's actually been doing quite nicely. There were some nice breakouts there in biotech and healthcare recently as well. Now let's move over to the Chinese market before we go to the American market. Tencent holding up okay. Chinese market now giving up a little bit of the gains it just had. And we've now got some really good levels to set. Now this is a daily 20 moving average and a huge high level. 17,450, that's going to give us a day trade. And we're waiting for it. But of course, it's unwinding like the rest of the market right now. So no bid just there. UK 100, surprised to not see a bid on this, but that's the nature sometimes of these markets. Needs to find a bid until it's above 8.2. Can't really see it. This is where I thought we'd get a bit of a bull flip zone, but we did not. Of course, the markets are absolutely melting down, so they're freaking out. Sometimes that can happen. NVDA 95 is what everyone's looking for the gap fill, but notice it did bid through last week. So there's clearly someone that wants these semis, and we've seen that in all those trades that we shared in our previous video. Watching 95 today, watching, of course, 100 as well. Seeing how these puts. We're in negative gamma, so you really are buying the dip. You're not buying the V at this point if you're doing this. Semiconductors, interesting. Most traded zone. We've come down, we hit it. We're going to trade lower than this today, almost 4% off the NASDAQ. So that's going to probably push this 200. Now, this is so important to hold. This is actually where you go from a structural market that is bullish on semis to a structural market that is bearish on semis. So yes, we expected a pullback in time up in here. We expected a weakness that goes for 1 to 3 months, probably not this low. I expected this, which is 230. We are probably now going to hit 200, it looks like, at the time of this recording. And this is absolute meltdown central. So this is where bid must come in. We will be looking for dark pool activity. We will be looking for everything we can. Obviously, sending out some newsletters this week as well. So make sure to stay tuned for those. Sign up. Again, links in the description. Because this is an important point. We don't often find these. Again, still in the parameters of the US 500, which is key. Tesla, take a look at this. Probably going to go down to the 188 territory. I don't think 200 is going to hold it. There are some problems with Tesla we'll talk about in other videos. This is why, unfortunately, an island reversal in the middle of nowhere may not work. And that's why I didn't like that in particular. It was there, but it wasn't that great. What about US 2K? Well, this is the thing. Markets are capitulating. We're at Nikkei capitulating into a key trade zone. The Russell has gone past the 61.8 into a key trade zone, most traded zone. So it must really start to find bid here. Again, semiconductors are going to be sitting on that 120. This is a bid across the board, including what's going on in the crypto world. So many things hitting bid prices that are so critical. These are all critical. I want to just point out here, the Dow is barely down. So it's a total tale of different markets. Again, in the US, it's a complete meltdown of tech, but at the same time, the rest of the markets are not that bad. The Dow here, let's go from top to bottom. Top to bottom is 5%, not even. So, big differences there across the board. Let's have a look at now at the NASDAQ. This thing is not finding any bid price. I can't really find a bid price before we get down to 17,002 to 17,000. So, yeah, it keeps dropping here. It's gone through that trend line. We got that initial big bid into the 20-day moving average, the last bear area, and they pushed it down hard. So 61.8 taken out, 75 fib taken out, no bid on those, no structural bid yet, and the NASDAQ is flailing here coming into this point. But you'll notice a lot of this will time up with semiconductors, and it's going to be a very interesting next 24 hours. Hopefully we start to find a bid, unless you are a bear that really wants this thing to collapse. Down below this level of 17,000, we start to change all of the trends. So everything starts changing. So of course, an important 24 hours, one of the wildest we've seen in quite some time. Bitcoin versus Ethereum, both have hit critical levels. They flash crashed into these zones, bang straight into the 52K zone on Bitcoin, something we've sat there for ages looking for. We didn't hit it last time. Now we've hit it. Stops need to be below here. 42 is, of course, now open. But realistically, these are such critical points for crypto. Look at Ethereum, straight into 23. I mean, this is huge, this zone. So when we hit the 2238, that's like such a big level for it. So again, these are flash crashes. These are serious flash crashes. That's what crypto's known for. And if you think about it, this actually dropped 40% in only a few days. So yeah, that's some brutal flash crashing there off these high zones. Bitcoin not able to hold it. Probably the big warning sign for Bitcoin was when that daily unable to hold here. It was actually a great little day trade in here that I would take every time. I actually took the same trade over here, so it was pretty similar. That one worked out, good little 2-to-1 ratio. This one over here, not so good, just got stop lost. It is what it is, but sometimes that happens. But when that happened, no bid. I was thinking about 61.8. Did we get a bid on that? Nothing happened. I looked for it, but that's why we have patience, react, don't predict. And now, you could say react, don't predict, but damn, it's a pretty interesting level for sure. What about the news for the week ahead? Well, we don't expect a rate hike in Australia, that's for sure. ISM Services PMI will be watched. That is at 10 a.m. New York time. Then not too much news, so it's going to be really just what is going on in the world. Do we have recession? Do we have the W word, which I don't think it is? And what about this Japanese unwind? Is that really the story, or is this just hedge funds absolutely collapsing, negative gamma, and wiping out a lot of people's bullish positions? I would say it's probably a lot of those. We watch semiconductors. That is the market to watch. Make sure to sign up for our newsletter as well. Popping out a couple this week, guys, for sure. Check us out on X as well. And if you're interested, we are doing a special sale for this week as well. If you're interested in finding out how to replicate similar trades, have the patience to do trading totally different to investing. If you're interested in investing, cyclicals, why we think gold was so strong this year, all of those types of things, check out our advanced masterclass. It probably will totally change your mind. Well, actually, I know it will completely revolutionize the way you think about markets. We go into some detail that we just do not do on this show. Thanks so much, guys, and have a good weekend. Hopefully, we get some bid for the bulls out there, but I think either way, these zones are absolutely critical now. This is pure capitulation at play, and we're seeing that in the Japanese market more than anything else. Bye for now.